I'm outside in the TNT. You
All
and me.
right, cool. We are live. Vassal, I like the singing. Just
Oh,
to
we
get us
are
started on
live,
our Friday.
really? Oh, cool.
Yeah. We are live. Um, so lots to talk about, Vassal. First thing I want to do is welcome our viewers coming from all different parts of the world. Um, if you guys are not familiar with Alpha Trades or Vassal or myself, Vassal and I have been trading for a combined experience of almost 14, 15 years. And the one thing that we try to do more often than not is explain our thesis in the market, explain as best with our sound reasoning, our analysis of why we are trading specific companies, specific projects, whether it's crypto related, stock market related, etc. And we try to distill this information to our community in the most concise way possible. Sometimes we make these videos, and sometimes, for our private members, we make these kinds of posts. Like Fassel writes these morning updates for our Advantage members every single day. So if you guys like the content, hit the thumbs up, leave us a comment, and then you can also just follow us on Twitter, because we post a lot of really good stuff on Twitter of retweets, our thoughts, even trade setups that we're taking for that particular day or that particular week. So make sure you hit the thumbs up. Until then, let's get started. Welcome, Fassel.
What's up, man? How are you doing?
Fantastic week so far in the market, huh?
Yeah, it was pretty good. I mean, it definitely was a little dispersed. I think the market lacked a sense of real direction in terms of just what sectors were going to do good for a continuated time. So, for instance, we had a pullback, I think that started last week in the high growth stocks. So you saw tech as well as biotech really pull back from their highs. They'd been doing so well over the past month to 2 months as they'd become the real safety trade in terms of trying to invest in companies that were not affected by COVID and could still produce innovation that was being accelerated in its adoption rate. So the need for new medical equipment, the need for new medical technology and drugs was accelerated, and the need for the adoption of tech like SaaS software or analytics was also accelerated. So we got that pullback last week. I was expecting value to do well this week coming in, and largely it did do well. You had financials close the week up 1.5%. Energy closed up nearly 3%. And the leader of the pack, industrials, closed up just over 3.2 or just under 3.2%. So you had a really nice broadening of sectors because tech actually closed flat. It was only a 0.1% for the week. So once again, we could still be in a rotation into value and out of tech, but as of right now, I think the market is setting up for a really broad rally. Like I think we could have gotten a lot more breakdowns in the high growth sector and the high growth leaders. I didn't see that. I actually saw stability, and I even took a position in AYX earlier this week because I just felt like there was a possibility that tech could see a nice bounce from here. Even though these stocks were so extended and you got this 8 to 10% pullback in the matter of a week, it may seem justifiable based on traditional pullbacks, but in this market, I think we have to assume that it could do anything and that it could keep going up as long as the Fed remains on the gas pedal.
I'm actually glad you brought up the Fed, because I do want to get into that. But first, this AYX trade, I'm glad you also brought that up, because on the Advantage side, I know people who are not familiar with our community, when Fassel takes a trade, by the way, it's actually listed in channels like this, like stock alerts. These are, some of the trades that Fassel takes or closes out. So this is the kind of information that viewers can get on a daily basis, because Fassel day trades the market. So if you are interested in information like that, you could subscribe to our community. You can go to alphatrades.com. You can hit the products page right here, and then you can sign up for the Advantage membership, and you will get these alerts. Now, going back to the analysis, Fassel, you said the movement in the market wasn't as uniform. You said tech was flat or kind of down. We spoke last week a little bit about the rotation from high growth and tech maybe into value. Do you think that we're still in the middle of that?
See that's exactly what is very. I can't determine that, to be honest. Like, I'm not going to come here and say that I know that things are going to for sure happen. I think coming into the week, it was more probable that we were going to see value rally and tech take a break. But after this week, this rotation out of tech, there's still so much money on the sidelines, and I think I'm starting to warm up to the idea. That we will see a broad market rally where tech will probably trade back up to its highs that it was at 2 weeks ago. But you could see a broad acceleration in gains for the industrials, the financials, and especially energy stocks. So, like, the rotation is still in effect, but it's not necessarily coming out of tech and into another area. I think it's going to be um, more so tech will stay within a range, but it'll still go up. But you will see the value sectors outperform more on a weekly basis, just as you saw this week.
Okay, fair point. Now you mentioned, the Fed intervention. I wanted to read off a snippet from one of the famous Austrian economists, Ludwig von Mises, and his snippet kind of goes like this, where he talks about in issuing fiduciary media, by which I mean banknotes without gold backing or current accounts, which are not entirely backed by gold reserves, the banks are in a position to expand credit considerably. The creation of these additional fiduciary media permits them to extend credit well beyond the limits set by their own assets and by the funds entrusted to them by their clients. They intervene on the market, in this case, of suppliers of additional credit created by themselves, and they thus produce a lowering of the rate of interest, which falls below the level at which would have been without their intervention. The lowering of the interest rates stimulates economic activity, projects which would have not been thought of as profitable if the rate of interest had not been influenced by the manipulation of the banks, and which therefore would not have been undertaken, are nevertheless profitable and can be initiated. I think some of this research had been done decades ago. I think some of this was written around the 90s. It rings very true today, no?
Yeah, I mean, at this point, like, that's what the Fed has enacted the banks to do, is just to expand credit as much as possible and be the ultimate lifeline for situations like this, especially after they completely collapsed in 2009. That's just the effects of the reform that has occurred in the banking sector. But it definitely reminds me of what's going on now.
Yeah, and to add on to that, it seems like we've definitely seen a skewing of how asset managers, portfolio managers look at the market in terms of risk and capital allocation. Right? This is why we see bubbles, sort of, or mini bubbles, or an overall bubble developing in the market. Companies like Nikola, which are worth $17 billion or something, have maybe less than $30,000 in revenue. Banks are still currently down, negative 30%. The S&P 500 is only 20 or 30 points below its previous all-time high pre-COVID. Do you think that the whole concept that we've been talking about, value investing, and tech potentially flowing into value, do you think that the ceiling of value will be capped simply on the premise that the Fed has sort of created this bubble and most people are going to be chasing stocks which are already hot, which makes the case for things like Tesla, things like Nikola? No one's looking to buy JP Morgan or Citigroup, right?
Sure, but I think there's some rationale to what people are chasing. Like, for instance, I remember at the beginning of this correction, people were chasing the airlines purely because they had dropped so much, and people thought they were getting a tremendous value buying at the March lows. And so, while you've seen people rush into certain sectors, they haven't really panned out. Like, for instance, when you look at the electric vehicle sector, where they've just skyrocketed to unbelievable proportions. But then again, there have been major developments as far as companies taking these electric vehicle initiatives like Amazon and UPS. So there's some rationale to it. It's not a complete, I'm throwing my money at whatever's low because I think 100% it's going to go up, because a lot of times it hasn't. I think people bought into definitely the bailout stocks expecting them to do very good, and they haven't turned out that way. But I'll definitely agree, when there's good news, it feels like this market just amplifies it like crazy. So, for instance, because there's just this slight increase in integration of electric vehicles, now you got to pay the most extreme premium for any type of electric vehicle company. So there's a small bit of rationale, but once again, it's susceptible to exuberance nonetheless, like just crazy excitement.
Yeah, that I think that's a fair point. I do agree. It definitely seems like the Fed themselves have created this, this TINA, this there is no other alternative other than investing in the stock market. Like, even today, I think Nancy Pelosi on Capitol Hill, I think she had mentioned, was it? She said, House Speaker Nancy Pelosi speaks on MSNBC, says stock market is doing well because Fed bolstered it. Right? I mean, it seems like it's now such a common thought or a common argument that no one is kind of batting an eye, thinking, "Wait a second, is the Fed doing this in terms of looking out the best interest of what's good for the overall economy, or are they simply saying, hey, we believe the stock market going up should bode well for the economy?" And in relation to doing that, they're effectively creating a bigger problem, a problem that we may not be able to solve, later down the line.
Well, I think she came about it from she's just trying to rag on Trump. I think she's definitely trying to discount what's really going on in the market, which is a lot of the major companies that account for a large portion of the GDP. Like the Microsofts, the Apples, they've done well. They have accelerated their gains through this crisis, and so that can't be understated. I think the market is doing well because the main leaders have done just phenomenally well, and there's been this narrow trade into these big cap stocks that has just fueled the overall indexes. So I don't know how I could my take on that, but once again, the Fed has really eliminated the downside risk, and I
Yeah.
think that's totally different from when we had dropped 30% from the highs. I think I had mentioned it back then that we took out 3 years of gains. So before that crisis, the last 3 years were actually pretty good. I think if I remember correctly, they were very good. And all those gains were pretty much wiped away in literally a month. And so when you have the Fed at that type of crisis, the Fed come in and say, we are going to backstop all the bottoms, it is not going to get as bad as anyone thinks. I think they're doing exactly what they should. They are alleviating the fear. And yeah, it's really bad that they're buying bonds like Microsoft and Apple with companies that don't need it. But ultimately, they had to do what they had to do, not in terms of buying those specific bonds, but definitely coming out and saying, we will be in charge of this market. Because it was like all hell broke loose back in mid-March. Everyone thought everything was going to hell. Like
Yeah.
how could the government and Fed hold up every industry if everything stops? And I think they did a great job in calming everyone's senses.
Yeah, that's a fair point. Um, Although one could make the argument that did they really help out the average person, the SMEs, the small to medium enterprises, or did they really just flush the money, flush the market with money, especially when it comes to Wall Street and large corporations that deal with the stock market and really enrich them? Because we've seen the argument that millionaires to billionaires have added significant wealth to the riches. Companies like Amazon, Facebook, Tesla, Apple, these companies are now worth than some of the more significant economies in, say, Europe or Asia combined. So I don't know if I could make the argument that, okay, yeah, they did what was best for the economy or the people. I think they did what was best for the market.
True. I think that's a fair point to make. Definitely.
Okay. Let's. I also want to talk about another thing that kind of leads into this topic right here, which is the Fed intervention and how businesses are impacted. And I think that kind of comes down to cash flow, right? The money available, the rate at which people are actually utilizing the businesses, the services that are available to them. And specifically, what I want to talk about is Disney. Um, I think you and I are probably
Ooh.
pretty big fans of Disney, right? Um, the CEO Bob Chapek, I mean, he's put in some pretty good changes. I think he's pushed the company towards more streaming, right? Which I think is probably a very smart idea. However, theme parks, cruise lines, resorts within Disney have gotten hammered a lot. Their revenue fell by negative 42%, I think, last quarter. They also furloughed 100,000 workers last quarter. And so, Disney also announced that they're closing 20 foreign TV channels, closing English language schools in China, and they've scaled back $1 billion in tech projects. So, my question is, if such a well-capitalized, well-run company like Disney is already seeing such large effects, I can't imagine that most of America, especially SMEs or other businesses or even companies within the stock market, even if you look at IWM, I cannot imagine that they are doing any bit better than how Disney's doing.
Yeah, for sure. They're definitely doing worse because half of Disney's business is fine. They're a media company, and I think they're streaming like it's not just the alternative revenue for them. I think it helps their entire ecosystem. I think it's amazing how a kid can be 5 years old and today and they could watch a movie like Lion King that came out 20, 30 years ago because of streaming, and they're able to buy those products or relate to that movie 20 years later, 30 years later. I think ultimately streaming diversifies their pipeline from merchandising to actually getting out the content to consumers. I think the future for Disney is amazing. So even though this is a temporary setback, because I think 40% or 50% of the revenue comes from parks, which are, that they're at risk of even being closed in some cases. I think Florida is still bad. California is bad. So there's a lot of ongoing risks that like they're feeling definitely the heat of it. And in some cases, they may not even be able to open. So I could definitely see why this company is struggling, and it definitely is shared among businesses that are in the entertainment sphere, the leisure sphere, the hospitality sector. They're all going through the same type of issues. But once again, I think like if you're just talking strictly on Disney, yeah, I see some more choppiness as it gets back to normal. But once again, if it comes down anywhere to below 100, I'm personally going to be a buyer.
Yeah, yeah, I do think Disney is definitely a solid company, and in my experience, it's probably going to be a good long-term hold. Um, but what are your thoughts, on other leaders like Disney? Now, are you seeing sort of the same signs where near term you're a bit concerned, or do you think that because the market is in such a risk-on mode, that you feel comfortable taking a bit more risk on, stocks like Disney?
No, Disney is a little bit different. I think their streaming numbers are growing amazingly. Like there's a part of their business that should be valued as a high growth company, not like Netflix, and there's another half of their company that should be valued like a casino company, which is really struggling to bring people into their resorts and theme parks or whatever. So I don't really know if I want to take a shot on Disney. Once again, it's a really mixed stock, but there are other leaders that are being affected the same. Like Comcast, for instance, is the exact same way because they have parks. They're seeing still they're seeing trends of cord cutting, but they're also diversifying by getting their streaming service up to date. So they have a huge catalog. They have a very interesting revenue model that I think is going to be a game changer by having a free streaming service, but with advertising content for the type of sitcoms and content catalog that they have. It's going to be amazing. But there are multiple leaders that are facing these problems, but now is not the time to buy it. That's just my personal opinion. You're going to see these stocks chop back and forth as they continue to bring people back to their other side of their business, a very core part of their business, which is theme parks. But ultimately, once they do come out of this period, I think they will become a lot leaner, whether they're going to have fewer jobs on site and have lower labor costs, or somehow they're going to be able to be a much more efficient company because of what they've gone through today. So if I'm a holder, like long-term holder, I'm still going to hold on to it. I think we've gone through the worst of the real life situations. Like we've already seen the worst, the closing down of the parks and everything. But once again, I'm definitely going to be a buyer if it comes down to the lower end of the ranges, and that speaks for a lot of the leaders within this type of sector.
Perfect. Good to hear your thoughts on that. So we have a question from one of our Advantage members, Faisal. Well, what do you think of Remark Holdings?
Mark, I haven't heard of this company. MARK. Let me check it out real quick. Okay, that's not that. That's not that real estate company, right? That's Remax.
Yeah, that's Remax. Now,
Okay.
This is an artificial intelligence crowd counting. I guess for the Chinese social credit system. That's what I got out of it.
Oh, it's a Chinese stock. Yeah, I'm
Well,
sorry.
I don't really know if it's a Chinese stock per se, because it looks like it's listed on Nasdaq.
Interesting. So I don't really know enough about the company to give you a fundamental rundown, but technically it looks like they just reported. Damn, they just reported today, this morning. They got sold off a little bit on their earnings. I haven't read the report at all, but technically, what you want to watch for if you are a buyer of this stock absolutely needs to hold, and I think it's going to fake people out. You would think it needs to hold that low that it made earlier at 125, but I think it definitely needs to hold 115. I think if it starts to break below there, that's when I would get out. But ultimately, I don't know too much about the stock, but it looks like there was some heavy buying volume early in April at the bottom of this recession. I don't know what the catalyst is, but as long as it holds that 1.115 level, I think you can be fine.
Okay, fair point. I do want to comment and say that there is other companies. If you're simply looking for more cutting edge companies, there's funds like ARK that you can look at, ARK Invest, and they have different ETFs like ARK dot. What is it?
There's ARKG, ARKQ. They're all really good. Their
Yeah,
portfolio is
yeah,
very good.
exactly. Yeah. So for WizKid, who's asking these questions, about companies like Remark, I think there are really good ETFs out there. Which, in my opinion, I don't really know who runs Remark. I don't really know that much about the fundamentals behind it, but I do know ARK, and I've been following ARK for several years now. And I think Kathy Wood, the way she runs the companies, her belief in investing in cutting edge technologies, the different ETFs that they have invested. I personally think that that would be the route that I'd want to focus on if I'm really going to go, trying to buy these new sort of new high tech companies. Just something to pay attention to. Um, Faisal, anything else that you're paying attention to today or going into next week?
Going into next week, I really think that with all the trade tension that's going on and all the international stuff that's going on, even though we have a low dollar, international stocks are going to see benefit from that. I think there's going to be some type of turbulence that's going to affect the overall momentum. So even if we do get this nice rally from the value sectors, I think the international stocks, whether it's the banks, the big money center banks or something else that's more internationally based is going to get not hit, but they're not going to see as much momentum as some of the more domestic based um, value sector picks. Like for instance, the railroads are value sector picks. CSX is good, NSC and UNP is the top pick. It's been the leader for a long time and it continues to be a leader. I think rails will continue to do good because they are purely domestic based and shielded from all the international turmoil that's going on. And also, I touched on it on my Twitter, the insurance companies. I've talked about them in previous videos. PGR continues to be the main leader to follow and to watch. But Ally, ALLY, and Allstate, ALL, are both pretty good picks for the sector. So I'm definitely watching those two next week. I think they're going to see tremendous gains, especially if you see a value sector rally. Keep an eye on these stocks because I think they'll definitely benefit.
Perfect. All right. Well, if there's nothing else you have on your topic agenda, we can pretty much wrap it here.
Let me see. No, I think I am good. I think I'm good.
Perfect. Well, thanks so much for joining us, Faisal. Again, for those of you who are watching, hit the thumbs up if you enjoy our content. You can follow us on Twitter, or you can join our Discord community. Our private Discord community has all these locked channels, and Facile provides equities updates every single day. We do these videos for our Advantage members as well as free members. So if you're interested in options trading, or trades that Facile is taking, and you want to see exactly what he's trading, come join the Advantage membership. The link is below. Until then, take care. Have a good rest of your Friday, and we will see y'all Sunday for another video. All right. Cheers.
Peace.